So, GameStop has amassed an extraordinary amount of cash. We go to the financials real quick. Balance sheet, $8.6 billion in cash and cash equivalents as of quarter two of 2025, representing one of the most dramatic cash buildups in recent corporate history. The massive financial war chest stems from a deliberate strategic pivot by Ryan Cohen to transform GameStop from a struggling video game retailer into something fundamentally different. So, one of the biggest questions we have for GameStop: why is GameStop amassing a massive amount of cash reserves? With $8.6 billion in cash, they also have receivables, they also have their inventory, and of course, gross property, plant, and equipment, some of the real estate they hold, giving GameStop over $9.3 billion in liquid cash. So how did they build this cash? Well, let's go to the chart real quick. Back during the first short squeeze, so GameStop capitalized on this astronomical stock price that happened back in 2021, the first short squeeze that ever happened. And during this meme stock frenzy and the subsequent rallies that happened right after, GameStop conducted strategic stock offerings at these elevated valuations. So the company wisely converted market hype into tangible capital. That's where they started raising some cash back in 2021. And after that, a couple years later, zero interest debt financing. In 2025, GameStop issued multiple convertible senior debt offerings, as you can see right here, raising $1.7 billion and also $2.25 billion in convertible senior notes due in 2032. Now, these two convertible note offerings provided substantial capital without immediate interest obligations. And this financing structure they did allowed the company to earn interest on deployed capital while avoiding debt service costs. They're not paying any interest on this $2.25 and $1.75 billion in cash. Go to the income statement. They haven't been paying any interest on any cash they hold from 2023. And also, extreme changes in the company. They dramatically reduced their operating expenses while simultaneously closing underperforming stores. They exited Europe, they sold their Canadian branch, and a lot of this cost cutting generated significant free cash flow. When we go to the statement of cash flows and we check out free cash flow, let's go to quarterly because 2025 is actually one of the best years they're having so far. GameStop is now sitting on 5 consecutive quarters, all posting positive cash flow from operations, year-over-year growth. May 2025, the second quarter, they posted $192.5 million. This is one of the best cash flow from operations they've ever posted in the past 2 years. So what is the main strategic rationale behind Ryan Cohen, and why is he hoarding all this cash? Well, number one of the biggest rumors out there is transformation capital. The massive cash reserves provide GameStop with flexibility to pursue major acquisitions, strategic investments, or some business model pivots. Remember, if you go to the investor.gamestop.com, they changed the look of the site to make it look like Berkshire Hathaway. So when you go to Berkshire Hathaway investor relations, looks exactly the same. GameStop's Berkshire Hathaway. Ryan Cohen could be sending a signal. Cohen has hinted at transitioning GameStop into a holding company similar to Berkshire Hathaway. He does have a couple tricks up his sleeve. What else does GameStop hold? Bitcoin. Back in early May, they purchased 4,710 Bitcoin. The average price of the Bitcoin purchase was around $92,000. They are currently up on their Bitcoin investment with a total value of over $500 million. And as Ryan Cohen stated in one of the interviews, they are using Bitcoin as a hedge against inflation and systematic risk. So this mirrors the strategy of companies like MicroStrategy, potentially transforming GameStop into a Bitcoin proxy play. Except lately, they haven't been buying any more Bitcoin. They just did one purchase, which was the 4,710, and haven't purchased more ever since. Lastly, with the big amount of cash, this puts GameStop in a defensive position, protects GameStop from bankruptcy risk, and provides a buffer. Just by looking at net cash though, let's just take out long-term debt. GameStop still holds around $4.4 billion in net cash after debt. The company has significant financial flexibility. So right now, the retail investors and the whole GameStop community is just pretty much focused on how Cohen is going to deploy this cash. But the major potential scenarios include major acquisitions in gaming, technology, or similar industries. Remember, they are expanding with PSA trading cards. They just came out with power packs, still currently in beta, unless you were one of the special people and you were invited. Once the thing is fully developed, I think this thing is going to be a major game changer. What else can GameStop do? Well, they could return money to shareholders through dividends or share buybacks. And of course, on the latest news from GameStop, they did just issue the dividend warrants to shareholders. If you haven't seen my previous video, definitely check that out. I'll put the link right here. But basically, GameStop just gave everyone some stock options. But this whole dividend of warrants to shareholders is just another way for GameStop to raise even more capital on a non-dilutive basis. They could raise up to $1.9 billion if everyone exercises their shares at a minimum of 32. It could push their cash holdings to over 10 billion if people decide to exercise those warrants. Next, they could buy more Bitcoin, fight inflation. Bitcoin's currently at 115,000. They could buy more Bitcoin. They could possibly invest in new business ventures or startup companies. But again, the biggest rumor is that holding company vision that a lot of people have. Ryan Cohen does appear to be positioning GameStop as an investment vehicle rather than a pure video game retail play. I feel like this transformation for GameStop is fundamentally going to change GameStop forever, change their identity and investment thesis. They're trying to leverage the capital markets to build something entirely new. While the core business stabilizes and potentially recovers, which is currently happening right now, I feel like Ryan Cohen has a lot of surprises for us. As of right now, GameStop sitting at around $25 is a super steal, $11 billion valuation. This company has been held down by the shorts for so long. Will the dividend warrants do anything in the next month? They have created a base for the GameStop price, and so I guess we'll all have to wait and see what Ryan Cohen's master plan is. But as of right now, GameStop is on its way. Is the recall going to happen soon? Are we going to see another short squeeze? Let me know what you guys think in the comments below, and thanks for watching this video. We'll see you in the next one.